So over $100,000 will go back into Australian homeowners' pockets if they maintain their current repayments and don't drop it down to the new minimums.
If you're compounding your wealth, 4 years off your home loan is massive. $150,000 in after-tax money in savings on interest, and allow you to breathe a little bit easier. Welcome back to our little weekly wrap-up, Jared. There's been what we had anticipated, a 0.25% cut from the Reserve Bank on Tuesday.
Welcome, Kerrod. Absolutely. Welcome news came in on Tuesday around the rate from the RBA coming down 0.25%, pretty widely tipped that it was going to be 0.25%. There were a couple of outstanding liars at 0.5%, which didn't get to, but
we may have been in that camp hoping for that to come through, but it didn't come to fruition. Yes, so
it's a very welcome news for homeowners. Obviously, some numbers that were done up for clients to talk to. 0.25% may not sound like a lot, but on the average Australian home loan, 700,000. If your rate's coming down from 6%, let's call it as a round number to 5.75. That cut there, if you maintain the status quo of your repayments, and the repayments on that over a 30-year period are $968. If you leave that repayment exactly where it is and continue at the lower, that'll cut down your total interest bill over that 30 years. At the previous 6%, it was $809,000. Leaving it with a 0.25% cut brings it down to $708,000. So over $100,000 will go back into Australian homeowners' pockets if they maintain their current repayments and don't drop it down to the new minimums. So I thought that was pretty eye-opening. Now, compound that. If as a family, you or an individual, you've got the ability to put an extra $32 a week onto your home loan and have it at $1,000 a week instead of the $968, that then drops down another 2 years to 26 years, and the total interest bill falls to $648,000. So over $150,000 saving in interest, 4 years shaved off the home loan. Some pretty big compounding changes there if you have the ability to meet them.
Yes, the RBA on Tuesday did reduce the official cash rate, but such a large increase if you're compounding your wealth. 4 years off your home loan is massive. $150,000 in after-tax money in savings on interest, and allow you to breathe a little bit easier, all by sacrificing a little bit more.
Absolutely.
Great news. Bulldogs had a win on the weekend again, mate, but what about the mighty Eels?
How good was that? I was there.
In Newcastle,
yep.
Yes. Flooding, well, not flooding, but...
Not then. It was from Sunday.
The weather has been atrocious. Welcome news for farmers, but wow, we've had some wet weather over the last 6 weeks. Lots of places inundated with, especially along the eastern seaboard where we are, getting absolutely smashed at the moment. Absolutely smashed.
Hasn't been fun, has it?
No.
Nice day to be inside.
Yeah, well, I'm working with a lot of builders and trades, and it's very hard for them to get out and do anything at the moment. It's very hard for them to continue on projects, and that has a flow-on effect. It takes a little bit longer for anyone's builds, takes a little bit longer for any trade to get through. People keep their money inside their bank accounts a little bit longer, so it does hurt the economy in a roundabout way, this weather. But also, we've had the welcome news of a 0.25% rate cut. I was fortunate enough to go and attend a conference in Sydney this week where we listened to the NAB Westpac's chief economist, Lucy Ellis. She was the 2IC at the RBA for a long time. She's got some pretty interesting takes on the economy and where we are and looking forward. They're predicting, Westpac, that there will be another 0.5% basis cut from the interest rates over the next, for year end. So that'll be a full 1%, which is around base case that everyone is thinking. So a full 1%, if we can come down, I think the home loan rates for anywhere from 6 to 6.2. Might be 5 to 5.2 by the end of the year. Jared's just given us how much that can save us 2 years off the life of your loan if you keep the interest repayments the same. It can, that will continue to compound if we get a full percentage point off. I've also seen some statistics around home loan borrowing that with every 0.5% drop, the bank will actually lend you 5% more, which is nice. But what that does for house prices, everybody's just got a little bit more gunpowder, 5% more that they can go and spend on homes. So interest rates coming down, people have got a little bit more borrowing capacity. They can bid up housing prices, which, as we know, they're getting to exorbitant levels.
Two sides to that, isn't it? As a homeowner or an investor, are you happy and welcome news, but potentially as a first home buyer or somebody trying to get back into the market, it is going to increase competition levels, and it is going to increase the number of people at open homes that then will, drive up prices on the right properties.
Yep.
So yeah, there are advantages and disadvantages, obviously, depending on what your individual circumstances are and which side of the fence you sit on.
Exactly. Yes, if you're trying to get into the market, yes, you welcome it because your repayments are going to be lower. But then are house prices just going to increase by like 5% that interest rates have come down? You hope not, because you want to lock in some prices now that can be affordable for you without overpaying. But if you've got a home loan, it's nice because you get a little bit more cash in your pocket. Or, as Jared and I are mentioning, trying to keep those repayments at the same rate so you can get a little bit ahead in life and get your home loan repaid sooner rather than the 30-year noose around your neck of a home loan.
Those conferences are always very informative, and I think you come out of them pretty well educated. So what were some of the key points that you took out of it?
A couple, especially from Lucy, they've got some pretty good data around Westpac and people banking with Westpac. So the tax cuts that we've had over the last 12 months, Lucy and Westpac specifically, they're finding that people that bank with them are saving around 80% of that and only spending 20% from the tax cuts. So putting a little bit back into their pocket. The reason for that is that real wages in Australia over the last 2.5 years have actually gone backwards due to inflation running at 6 and 7%. So they're feeling the pinch, which is why they're saving more and not spending it. So the tax cuts are welcome relief. Also, the tax code, which she mentioned, are at fixed dollar values, which don't go up with inflation. So the fixed dollar value, let's call it, you've got the rates at 45 cents, $45,000 up to, now it goes to all the way up to 135,000, which is a fixed dollar amount. If you've got CPI increases in you, you may have a job through anywhere where you've got a collective bargaining agreement and your wage naturally increases by 3%, you may hit and go over that tax bracket, penalising you more because that tax is fixed in the dollar amount, which they see is basically the tax cuts that we've had coming back to neutral where they were about 5 years ago. So the uplift is in the spend is around what it was around 5 years ago because they are fixed in dollar amounts, which I thought was a key interesting insight that Westpac have got, and noting with the downturn that we've had in people's wages, saving a lot. Also, Trump's tariffs, hot topic around where they see markets globally, what's happening globally. Westpac's point of view is that it's not going to cause a recession, which is good. However, there's going to be slower growth, and especially here in Australia with more people saving money, slower growth. 80% of all new jobs over the last 12 months, interestingly as well, has come through from the care economy. The majority of that has come through from the NDIS as well. So
80%.
80% of new job creation.
That is a huge number.
It nearly knocked me off my chair when I heard it. Absolutely. Basically, our exports, which was a major part of our GDP over the last 20, 25 years in Australia, has stayed stagnant since 2020. So you think about coal exports, you think about iron ore, you think about gas exports, basically stayed neutral because nobody in the world was building, no large projects going on. Therefore, our materials have not been exported. So it's a really big slowdown there. We've got a lot of immigration coming through and 80% of all new jobs into the care economy. Amazing.
With an aging economy, it does make sense.
Yes.
And with it moving from the Department of Age and Disability into NDIS, I think there's a lot more care options available and a lot more better holistic care. But I probably wasn't expecting 80% of the jobs to come from that for the newly created jobs.
Newly created jobs, yeah. So it could be a worrying sign for Australia. And we've had very low growth here in Australia for a while, which Westpac are anticipating the consumer is hurting. It's a circular economy, so we're not exporting goods like we used to. That's also hurting our GDP and the Australian consumer, with spending less jobs in the areas that the manufacturing side in Australia is gone. The exporting side in Australia is staying stagnant. So GDP and growth in Australia is virtually stagnant. A little increase, which can be concerning in my point of view. Westpac's got a very slow growth in Australia.
Yeah. And it does make sense that it would be slow if we're not getting new dollars into the country at a rate that we were previously.
Yep.
Yeah, that's...
Yes.
Yeah,
So some key
very
insights
interesting.
from Lucy, which is, interesting to see where that all is, and home loans and rates, and they're starting to see building approvals. They've got a backlog, especially with their clients, with new home loans and everything like that. They've got a backlog there, so it'll take some time to get through. Doesn't help when we've got extreme weather like we do at the moment to try and get some new homes getting built.
People just need to get out of the ground, don't you? That's the most stressful bit until you get your slab down or until you see some frames start to go up. Because if you can get to lock up, and then a lot of it's not as weather dependent, but it's going to be very hard to get to that stage with what's happening.
Very hard for a concreter to pour a slab in the rain because it washes away. Now, I'm not a concreter, but I would assume that happens. And I know that concreters don't get poured, or concrete doesn't get poured in the rain. So it's very hard to get up to that lock-up stage.
There'd be a lot of brickies on rain days as well, I'd imagine.
Brickies, earth moving, a lot of them are having rain days, which is hard because it's been going for the last 6 weeks, basically. Since the school holidays, first week in April, it was, started this downfall.
Yeah.
So it's been going quite a while now. Yes.
Not easy to be a builder, is it?
No.
Not easy to be in the building game.
Definitely
Got
not.
a lot of good ones that do a lot of good things. So hopefully we see some dry weather for them soon.
Yes. Well, that's our little weekly wrap up for this week. 0.25% basis cut on interest rates, helping you to have a little bit more money in your pocket. Please try and keep that repayment the same. Knock 2 years off your loan. How good? Nice. Thank you, RBA. And
Thank you, Michelle.
Yes, thank you, Michelle. Appreciate it. Stay dry. Get an umbrella. Have some time with the kids. Read some books. Whatever you want to do. But it looks like we're staying inside for a little bit
Enjoy
longer.
being inside. All right. Have a great weekend, everyone. Tune in next time.